This bull market has recently celebrated its 10th anniversary. Some crazies think it can go another 10. Let's talk about that. This bull market is 10 years old now. Is it showing weakness? We'll look at the charts shortly, but first let's deal with a couple of other things. First, I want to apologize for not getting this video out yesterday. No excuses, only reasons that would just bore you and sound like excuses. I'll try not to drop the ball again. As usual, if you want to watch this video at light speed, click the gear in the lower right and select a new speed. And if you stick around to the end, you will be rewarded with the next trading maxim. And now let's have another look-see at Bitcoin. Ah yes, it's the magical Bitcoin. I've yacked incessantly about this, but only because everyone else is and I didn't want to be left out. Just kidding. I'm not in this yet because it hasn't really let up yet. And I don't want to buy at the top, just as it starts to pull back. That wouldn't be an excellent plan. So you can see it's pulling back just a little bit today. So our opportunity may be coming. Just exercise patience and let it come to you. So Boeing tricked me. I was talking, I think, last week about this descending triangle right here, and it didn't descend. It pushed down a little bit, but it popped back up. So you're not going to hear this from other trainers. Well, maybe you will hear it from some other trainers. But I'm telling you that descending triangles work, but not all the time. So this stuff happens sometimes and you got to be prepared for it. Nicely, the volume did not really support the move down here, so that kind of gave us a little heads up. And now it's gapping down right here. As you probably know, Boeing is having trouble due to a couple of fatal crashes of its new 737 MAX jet. So I don't really have a plan at this point what to do with this, but Barron's is warning that the earnings statement coming out in a couple of weeks is not going to live up to its estimates. So we'll just have to see how that goes. Okay, let's talk about the bull run and the S&P 500 here. I typically don't look at the monthly chart, but all the news is about whether this 10-year run starting back here in February of 2009 will continue for another 10 years. That seems kind of crazy, but I wouldn't have predicted this run over the last 10 years either. So, we just have to look at what the chart says. All right. But now you have to pay attention to the chart. You can clearly see that the move is weakening. Okay, we got nice push-ups, very little in the way of pullbacks, but all of a sudden we have this pattern up here. And look at this reduction in the volume. Now the volatility has stayed fairly consistent except this pop-up right here. And most of that is due to these huge bearish candles. So let's drill down to the weekly chart. I was talking about this head and shoulders back in March when I analyzed this chart. Nice trend into the pattern, which is important. If you don't have a trend into the pattern, you don't have a pattern. Left shoulder, head, right shoulder. At the time, the right shoulder was down here at the 2812 level. But the head and shoulders pattern is still valid because the shoulder is still below the head here. Now, typically you would take a break of this neckline right here with a huge stop, because the stop, according to standard head and shoulders practice, would be to put stop above the head and shoulders here, and you would target the height of the 1-to-1 essentially. Okay, and also you'd have to wait for this huge drop right here, but I'm saying that you can cheat off the right shoulder here. Look for just a candle sell signal. In other words, when the candle drops below the prior candle, and I would say closes below the prior candle and has decent volume, I would take it short. When I say decent volume, it doesn't have to break this average, but it needs to come close to it. Okay, it needs to be a significant portion of the 80 or 90% of the average volume, I would think. And then just put stop above here. If you had done that here, you would have had your stop right up in here somewhere, and looking for another opportunity. So always remember to look for good volume. Let's drill down to this daily chart now. The important thing that I see here on this daily chart is declining volume, declining volatility. In other words, a loss of interest in this uptrend right here. Plus, you can see that the uptrend is rolling over. We broke the original uptrend line. We pushed back up through it. Kind of, essentially, we washed this line, and now we have a new trend line, and a push down toward that. So, this is. I totally don't understand why the analysts are talking this up and saying, are we going to have this huge 10-year continuation of this trend? I don't know, maybe they have ulterior motives or something, but I try to avoid conspiracy theories. Okay, you made it to the end of this video, and as promised, Tim's trading maxim number 20. Don't let the fire in your belly melt the ice in your head. Don't be ruled by emotion, fear, greed, whatever. Let logic rule your trading. Stick to your rules. Always. If this video has helped you, please click the thumbs up below. Thanks for watching. Thanks for subscribing, and have a great week. See you next time.